I'm going to teach you about a very special line of credit that's only for seniors that grows tax-free every single year. It doesn't end. You don't have to make payments on the money that you take, but the point of it is not taking money right away. It's growing a big old retirement safety net so that when you need the money, you have a lot more than you originally thought you would have. And you know what? We'll go over a client's situation. It's called the reverse mortgage line of credit, by the way. My client is Gary. He closed on it a little bit over 2 months ago. And we're going to, I don't know, 2 months ago, 3 months ago, something like that. Anyway, I'll have his email that he wrote. I'll show you the email he wrote to me. I'll show you the actual amortization table from closing so you can see how it works. And by the end of this video, if you don't think this is the greatest line of credit that you've ever seen, then I did something wrong. So let's go into, I'll just introduce myself real quick. My name's Jason Eichmiller. I own and run Reverse Mortgage Reality and Key Home Lending. Let me go to the website real quick. Here you go. My contact information is flashing on the bottom of the screen, but I've helped seniors with reverse mortgages since 2008. And I've helped a little bit over 450 of them. I consistently educate financial advisors and CPAs and attorneys about how these work and how they can use them as intelligently as possible for their client. So you can call me, the 888 number that's flashing on the screen. You can email me at jason@keyhomelending.com. This is if you have any questions or if you want to see if a reverse can work for you and how it can work for you. Or if you want to go and kind of pick a time to talk, you can go to reversequotes.com. This is the website that's on your screen right now. You can see my phone number's up there. If you want to enter your information right here, you can on the right. And then, or if you're on mobile, it's on the bottom. So just depending, desktop on the right, mobile on the bottom. And then if you scroll down, got a bunch of testimonials, where videos with clients. This is an attorney, a client's daughter. More Google reviews and emails and letters and all that fun stuff. So you want to read through that, then go for it. But enough about me. That's just how to contact me if you need help. I want to share with you, I want to share Gary's story with you. So let's go to his letter real quick. And if you want to read it word for word, you can just push pause. But basically, I had sent out an email to my clients late September, just asking, hey, what do you think would be valuable to educate folks about on this YouTube channel? And Gary, he dove straight in. He said, hey, emphasize the reverse mortgage HECM line of credit. So a little bit of background about Gary is he turned 62 right before he did this. This was his plan. He originally reached out to me. It was in either December or January before he turned 62. And he's got $1 million house. It's beautiful, by the way. Wants to be there for the rest of his life, which is perfect for this program. Beautiful home, free and clear. He has no debts. He's not taking Social Security yet. He's still working, so he's still hustling. But what Gary told me, it's so true. Gary told me you can't have enough money in retirement. And just think about that. There's no, Gary knew that retirement was going to be, his retirement was going to be for a while. He's in great shape. I mean, again, he's only 62 and he isn't even retired yet, but he plans to be retired for a long time. He wants to live the good life, and he wants to make sure he has as much as he possibly can. Number one, to enjoy himself, of course, but number two, in case, bad stuff happens. You need as much, and I'm talking to you right now, you need as much money in your retirement safety net as you can possibly get. So going through this email, I know I'm beating the drum on this one. I mean, he's such a fan about this after he's gotten it, and he believed in it while he was getting it. But it's neat to talk to folks a couple months after they have it, once the dust is settled, to see how they really feel. Are you still happy? Do you have any regrets? Like, how did you feel about it? So I'm beating the drum on this one, but there is not a product out there from the fixed income side of things that has the feature of the HECM line of credit. It's in reality a tax-free annuity pension line of credit, guaranteed blah blah blah. He gets into some financial planning terminology. I don't need you guys to be financial planning ologists. But he says, I've been to many seminars regarding annuitized products and retirement. Nothing comes close to this line of credit product. 4 pillars of an investment for retirement should be safety, growth, income, and liquidity. And the HECM line of credit fits that bill in spades. Jason, you have a product to offer that stands alone, blah, blah, blah. So, oh yeah, on the side note, and this is what I was talking about, the line of credit growth. The growth of my line of credit as of today is $4,248.01. Start date, 2 months before. So in 2 months, his line of credit has already grown about $2,000 a month. So let's take a look at the amortization table, and then I'll share some more information about this line of credit. This is actually the amortization table from his closing documents. So this was the final straw, if you will. So you can see right here, I'll guide you in a couple places. Initial property value, $1.045 million. Initial principal limit, $360. Initial line of credit, $330,000. And these numbers get it wrong, but it said expected interest rate 6.25. His interest rate's actually a little bit, or his growth rate is a little bit higher. So let's look at end of year projections. And as you're going through this, you see line of credit and you see this money going up. And I'll explain that in a second. But right now, we'll compare and contrast the regular HELOC, which I do, by the way, for folks who are under 62, if they need some money to kind of make home repairs or pay off high interest debt. I do lines of credit for them. That's perfectly okay. But this reverse mortgage line of credit, I don't really use it. I mean, I can use it to pay down debt. We use reverses to pay down debt. We use reverse mortgages for home repairs. But in this case, we're purely using this reverse line of credit as a financial planning tool. That's it. It's for retirement planning. It's not for now. It's for later. So a couple limitations of regular home equity lines of credit is that you have a set draw period, which means that you can only take money for X amount of years. Obviously, different companies have different amounts, but sometimes it's a 5-year draw period. That's pretty common, actually. Sometimes it's 3 years, sometimes it's 10 years. When that time's done, it's done. Then you go into repayment, so all the money that you took, you got to make payments on. Of course, it's just like a regular mortgage. There's nothing surprising about it. But this reverse mortgage line of credit is so different. Number one, obviously you understand with a reverse mortgage, you don't make payments on the money that you get. That's easy, that's obvious, I don't need to harp on that. But what sets this aside, besides the no repayment factor, is that the line of credit, if you leave it alone, or say it a little bit better, the money that's left over in the line of credit after you draw some money, that money that's left over, it will grow every single year for as long as you're alive, as long as you're in the house. So check it out. If you look at his age, 62, line of credit 330, and these are just projections. They can be a little bit off, and I'll go over how they can be off. But you can see that this growth is forever. If he makes it to 100, I'm not betting against the guy. Gary's a stud. But if he doesn't touch any of his money and he lives to be 100, he could have a line of credit of $4.2 million. Is that crazy? $4 million off of that's more than a 10x from his original line of credit at age 62. And again, I'll go over how it grows and how much we can trust these numbers in a second. So these emails just flash on the screen for some reason. So we understand, and again, to fully understand this, you have to understand that this draw period lasts forever. It's not a 5-year, 3-year, 10-year, whatever. This draw period and this growth period lasts as long as you live in the house. So if you plan on living in the house forever, then this line of credit is going to last forever. Of course, you can make payments at any time. You can pay it off at any time. You can refinance it at any time. You can sell the house at any time. But once this thing is set up, as long as you don't have immediate needs from the money, and if you do, take it. It's your money. You can. But once this thing is set up, you just kind of set it and forget it. You get a mortgage statement every single month telling you exactly how much is owed. So look here. You see the loan balance. You see the loan balance is growing up. It started at $30,000. It goes up 32, 34, 36, 39, 42. So yes, you have a very small loan balance, but look at here, line of credit 3. So you can read as well as I can, and I hope this is clear. If not, just let me know. I'm glad to email you over just a copy of this. Again, I took his personal information out of there so nobody can bug him. But look at this. Let's see when it doubles. So from 330, when do we double here? We're going to double between year 10 and 11 at current rate projections, right? Then let's say we've got 647, so year 10. When does it turn to 65, 1.3? No. Another 10 years. Doubles again. Then 10 years, 11 years, double. Let's see here, we're at 1.269. Let's say 1.38. 1.38 to 2.7, doubles again. And then you're looking at, look at this, monthly growth, 200,000, 500, 300,000. Okay, let's get back to reality here because that's down the line. And when you're 99, you're not enjoying life, right? Let's take a look at this right here. So Gary told me, again, let's look at his letter. He said the growth of my line of credit as of today is $4,248.01. That's 2 months in. So how does this growth work? So the growth, excuse me, I got a frog in my throat. The growth is equivalent to the interest rate plus a 0.5% mortgage insurance. So his growth is a little bit closer to 7%. Now, real quick, that growth goes up and it goes down. That's why this is kind of a guide. This isn't going to be exact numbers later on. So here's how the growth works and the interest on the reverse mortgage too. And by the way, I know this is going very, very deep into this. This isn't like a 10,000 foot view. This is really granular so that you understand what this program is and what it isn't. So if you're looking for a line of credit that's going to really stack cash and you can look at it 10 years, 15 years, 20 years down the line and then use it, then I mean this program, again, it's unparalleled. There's nothing like it out there. So anyway, let's go to how it grows or what decides how this thing grows. So you've got interest rates, right? So the reverse mortgage growth and interest rates are based on something called the 10-year CMT. So that adjusts every single month, which means that every single month your line of credit is going to grow more. Excuse me, frog in throat again. There we go. Cleared it maybe. Yes, I did. So every single year or every single month, your line of credit is going to grow faster or it's going to grow slower. And it's based on wherever the 10-year CMT moves. So if interest rates get worse, once you have this reverse line of credit set up, sounds terrible, but you're kind of rooting for interest rates to go up because the higher the rates go, the more growth you have on the line of credit. And conversely, of course, if interest rates drop, then the line of credit growth slows down a little bit. So there's no way to project it besides saying like, okay, well, if interest rates stay the same, because then we're getting into guessing games on are rates going to go up or down over the next 5 years, 10 years, 15 years, 20 years. Who knows? It's cyclical. They'll go up, they'll go down. So that's why these numbers aren't going to be exactly correct. But if rates stay exactly where they are right now, this is what Gary is going to see. So now you can kind of see the power in this. A couple more things I want to touch on real quick. If you decide to pay it, so you can see that there's a balance of about $30,000 on this thing. If Gary ever decides to pay it off, yeah, he can pay it off. Fantastic. You actually have to just have a balance of $50 on there. But if Gary pays $30,000 on it, then guess what happens to the line of credit? The line of credit goes up. Goes up by $30,000. So if he wrote a check for $30,000, then this line of credit wouldn't be $330 anymore. It would be $360. And all these numbers would adjust and there would just be more growth and it would be more powerful. The other thing is what happens if I owe more. I was actually talking to somebody about this yesterday. What happens if, you know what, let's cut to me. I haven't seen you guys in a while. So what happens, just get me on the screen here. What happens if you end up, your house value drops? Let's say 2008 happens and you owe, or you don't owe anything, but let's say that your house is only worth, let's say his house is worth $800,000 now, but his line of credit is $1 million. I posed this question to somebody yesterday about his situation. I said, what do you think? It was Dave, actually. What do you think where do you think how much of the line of credit could you take? So he said, I don't know. So it doesn't matter what the home value is. In this case, and we call this the ruthless method, because if the economy collapses and you have more money in your line of credit than the house is worth, you can still take all the money. Nobody can stop you. So in this case, just made up an example, but if 2008 happens, it'll be a real example. If the house is only worth 800, if it drops to 800 and you've got $1 million in your line of credit, take the million. You're not going to get taxed on it. As long as you live in the home and pay your property taxes and homeowners insurance, your property charges, nobody can ever say, we want the money back. So you just took $1 million in this example. You took $1 million out of a house that was worth way less than $1 million, and you're still staying there, and you're not making any monthly payments. That's power. But the real, because that's kind of a worst case economic scenario. And if that happens, everybody else is going to be panicking, and they're going to be thinking, oh my God, woe is me. What am I going to do? My house isn't worth anything. My investments are down. You say, man, I feel for you, but I just got $100 or $1 million check in my bank account and nothing is changing. It's pretty neat. So that is the reverse mortgage line of credit. I think we spent more time on this. Let's see, 16 minutes. More time on this than I expected to, but I wanted to go straight down the rabbit hole and really educate you on the ins and outs of this program. If you have any questions, feel free to type them below. You can also reach out to me. Of course, if you need help, this is what I do. I help seniors with reverse mortgages. I help them plan for their retirement and their future. So my name again is Jason, and my contact information is flashing below. Don't be shy. Pick up the phone. It's 888-309-9705. You can email me at jason@keyhomelending.com or go to reversequotes.com. The website already flashed. I flashed it at the beginning of this. No need to do it again. But yeah, if you're interested in a line of credit, whether you're 62, Gary planned it perfectly. But what do they say? The best time to plant a seed was 20 years ago. The second best time was yesterday or today or whatever the saying goes. If you think that your money might not last as long as you do in retirement, or if you just want to say hey, I just want to maximize everything that I've got. I want to use my home. I want to use my home to stay at home. Right? That's basically what this is. This is using his home while he's living there for retirement. If you want to do that, feel free to give me a ring. I'll ask you a bunch of questions, but through that, I'll be able to illustrate something just like I showed you with Gary, an amortization table, a comparison page where we break down the fees, the rates, what you can get out of it. We'll go over the different options, how you can do it. We'll go over the different programs, whether it's a HECM line of credit, whether it's a proprietary or a jumbo, whether it's a second reverse mortgage, whatever it is. Everybody's situation is different, but I imagine if you made it this far through the video, you're looking at the line of credit. So we'll just have a conversation, and I'll educate you. And if you want me to help, I'll do my best to help. And if not, then at least you learned, or maybe you're thinking about it for later on. But with the line of credit, let me actually go back here real quick. Oops, that's me. That didn't work very well. Let's do this. Okay. With the line of credit, you can see that the growth is over 6%. If you wait to do a reverse mortgage, say you go from 62 to 63, you will get more money, but it'll be about 1% to 2% more. So that 330 would be about let's say 340. It'll be less than that, but let's say 340. But then you're sacrificing this growth. So yes, you'll start off at a line of credit that's a little bit under 340, but look at where you are after a year. You're at 353 already. So that's $13,000 in the first year that you got just by taking, what do they say? Take the bull by its horns, or whatever the saying is. Back to me here. So nope, we're not back to me. Let's go here. There we go. Now we're back to me. I know how to work this. I really do. Anyway, I think you get the point. Doing it early is better because then you're really planning, and you're getting all of that line of credit growth. All of it, every little bit of it. So, again, if you want to learn about it, you want to see how it'll work for you, if you can do it, because no, I guess I should say not everybody can qualify for one of these. But we'll go through it real quick. If you can't qualify, I'll let you know damn near immediately, because I don't want you to think you can, get something that you can't. But if you can do it and you want to do it, and you're happy with your options, and we find together, we find the best option for you, then I'll do everything I can. I'll hold your hand through the entire process, and you'll be writing me a letter a few months later saying, "Man, I'm so happy that I did this," just like Gary. All right, you know how to reach me. Thanks so much for your time and your attention. And if you need me, I'm here. Take care.